Okay, any questions on the flow part? Okay, now yesterday we had seen and we had discussed about the ledger components. We discussed about 4Cs, that we need 4Cs to define our ledger, primary ledgers. So now what we are going to do is we are going to discuss our accounting configuration prerequisites for our ledgers. So we have these three prerequisites like chart of accounts, calendars, and currencies. So first of all, we'll discuss about chart of accounts. Now, what are the components of chart of accounts? Okay, so chart of accounts is nothing but a group of segments. Okay, so you have a group of segments, that is a chart of accounts. Chart of accounts, you will have a structure of chart of accounts. You can create multiple chart of account structures in the system, and you can use different chart of accounts for your different ledgers. Now there is a concept in Fusion which is slightly different from EBS, that is you can also have a chart of account structure instance. Okay, the only difference between a chart of account structure and a chart of account structure instance is that you can create and add different value sets at the instance level. So if you have a global chart of accounts, let's say you have a 5-segment chart of accounts and you have operations in US and UK, and it may happen that US and UK are following different value sets. They are having different value sets. So you can change the value set at the structure instance level. Now don't take me wrong here. If you create a structure instance and you attach US structure instance to your US ledger and UK structure instance to UK ledger, these are two different, this will be considered as two different chart of accounts only. It will not be considered as one chart of account. Though the structure is same, the segment structure is same, but the instances are different, and the instances are known like if you create a different instance for the same structure, it will be treated as a new chart of account or a different chart of account. So practically, if you see, there is not much use of it. They have just given this option to reduce the step of creating another structure instance, another structure again and again. So you can just use the same structure and create multiple instances out of it. If you're doing a global rollout, you have 30-40 countries, they're using the same structure and they just want to change the value set at the structure each segment level. You can do that. But system will still treat that structure instance as a different chart of account. Don't get under a notion that it is the same chart of account, just the value set is different. So it will be treated as a different chart of account, and all your cube creation process, all your segment security, everything works at the chart of account level, or your cross validation and everything. Okay, any questions or clarifications on chart of account structure and instance? Because a lot of people...
So mainly the advantage here, I would say, is additional balancing segment. Otherwise, it pretty much like e-business suite. Like we definitely, when we do the consolidation, we still need to do the same exercise of mapping, even if you're using the separate values, correct?
Right, right.
And we have the account hierarchies, right, which is not present in the EBS, like in terms of you could
EBS also you had account hierarchies, but here the advantage is you can create multiple account hierarchies.
And you can publish them into space, and that's main. And you can use them as dimensions in space also for smart reporting. So
that's right. That's right.
There you have only parent, but it's not like really you didn't have any UI also to see the hierarchies. Now you have better UI where you can do it tree level, drill down and all that stuff. So.
Correct, correct.
So Ashish, every time in the chart of accounts, if we create a structure, we need to attach a structure instance to it also. So if like you said, there could be multiple instances for a same structure. So I mean, how every time we need to create a different structure itself, or how would it go if there are multiple instances? I mean, the same segment structures but different values. So, or you would be showing how can we utilize that functionality?
Right. Let me explain it. So basically, the advantage of having a structure instance in place is you need not define the structure again and again. So you can define one chart of account structure, that is a global chart of account structure, and you define a US instance and a UK instance. Okay. And you might be having different value sets attached to the US chart of accounts and a different value sets to a UK chart of accounts. Now when I say value sets are nothing but a list of values. Whatever account codes, department codes, whatever company codes that you have, you might be having different codes in your US and UK. So one structure instance is mandatory. So if you're defining only one structure, so you need to at least define one instance. That is a mandatory system requirement. But if you want more than one instance, then you can optionally define it, right?
Okay, and that instance could be attached to the basic structure itself, right?
Correct, correct. So when you define an instance, you need to select a structure there. I'll show you. We'll define that in the system so you'll understand it.
Okay.
Right? So we have value sets. Value sets is nothing but the container of values. Then you have your segments. You also attach a segment label to your segments. It can be primary balancing, secondary balancing, third balancing. So in EBS we did not have secondary and third balancing. In Fusion we have the secondary and third balancing, but I don't see any practical use of it. Till now I haven't implemented secondary and third balancing in real time. For testing obviously I've done it a lot of times. But majorly all businesses choose to use only primary balancing, but if it is a core requirement we can still use secondary and third balancing as well.
Ashish, like whatever we are achieving through COS structure instances, we can achieve through security as well, right? Segment security. What is the difference between those two?
So basically when you do segment value security, the values will still be present there, right? So you still need to create the segment value security. Any new user is added, you need to add those roles to that particular user and all those things. But altogether, if you don't want those values at all in that particular list of values, then you decide to have a structure instance. There is, practically speaking, there is no practical use of structure instance.
Okay, thanks.
It is just a theoretical concept and Oracle has given this option, but practically I don't find any use of it. Okay, now you can define your security rules. I'll be discussing about security rules and cross-validation rules. I have one slide for each. So just an overview, security rules is nothing. Is basically you have certain list of values which you want to hide from specific set of people. You can hide those list of values from specific. Let's say there are certain department values. You don't want people in other departments to see these values, and security rule works on everything. You cannot enter data on for those list of values. You cannot run reports for those list of values. So security rules are optional. You need not write security rules for everything, and you write this on top of your segments. Then you create your values, you create your account hierarchies. So you can create account hierarchies. Now you can, there is an option in Fusion to create multiple account hierarchies simultaneously. You can also version your hierarchies. Let's say in 2019 you had a specific version, in 2020 you might want to change that particular version, and some of the account codes move under a different department, move under a different account code or something. That is also possible. Then you can define your cross-validation rules and you can define your account combinations optionally. Okay, so now we have chart of accounts So we will understand that an entity that uses the chart of accounts for an organization is majorly what, why, or how do we decide upon how many segments do you want. And it is the major thing is you have to understand the business reporting requirements. How do business report on their particular business scenarios, and how do they generate the reports? It can be any type of reporting that we discussed. It can be management reporting, it can be their financial reporting, statutory reporting, any kind of reporting that they want to take out of the system. We have to keep all those needs in mind while defining our chart of accounts. We have to keep in mind that it is secured, it is scalable in future, it is hierarchical. We have to define a logical hierarchy so that the reporting becomes easy. Okay, so we have certain basic principles that we keep in mind while creating the chart of accounts. Like for example, one business dimension, one segment. So let's say for example, you have a business dimension, we have to create one segment for it. You have different line of businesses, different operations or different types of businesses that a particular organization does. Let's say for example, Reliance Industries, they have operations in different parts. They're dealing with different product lines and everything. So you can have one business dimension as one particular segment. Okay, more than one meaning for one segment. Do not keep as a best practice as more than one meaning for one particular segment. So you do not merge two segments into one as well. Like say for example, line of business and your cost center segment, you do not define as one segment, because if you define it, you won't be able to take out the reporting out of it. So don't merge two segments into one segment. We keep the segments separately. Dependent segments, we could have dependent segments in EBS. This is not available in Fusion, so you cannot have dependent segments such as sub-accounts. So like in some scenarios, some business scenarios, you must have seen account and sub-account, where people used to define, and I'm talking about only the GL chart of accounts. I'm not talking about fixed assets and other modules. Other modules, you can, like in fixed assets, you can still have dependent segments. The only reason why we cannot have a dependent segment here is because SBase doesn't support it. So SBase Cube doesn't support your dependent segment, so we cannot have this dependent segment or value sets here.
So mainly if someone is moving from e-business suite to Fusion, and in e-business environment there were sub-accounts, so we need to create all those combinations as a separate natural account, correct?
Right. Okay, so then we have global segment structure and architectural consistency. Always as consultants, we always suggest the business to always go for a global chart of accounts. So they there is always this particular suggestion to go for global chart of accounts. You can include all your values in one global chart of accounts. You can leverage the security rules to hide the values from different parts of your globe, different entities and different divisions and all those things. You can still leverage the value security, segment value security, to hide those segments, but always it is a recommendation for going for a global chart of account segment structure. You can still have, there is no limitation from the system standpoint, but it is always a suggestion. The reason is maintenance activity in future. Business has less maintenance. In case they want to scale their operations into different countries, things becomes easy. Otherwise they have to write a lot of mapping between one chart of accounts to other chart of accounts. Obviously, if there is a high business requirement or need, and we cannot cater it using the global segment structure, then yes, we can define different chart of accounts for different operations or different entities or different countries. It is very much possible, but always suggestion as a consultant is to go for a global segment structure. Then we should keep basic things in mind: architectural consistency, something that we can track in a separate DFF, or if we are using a different subledger. Like for example, in some implementations you must have seen that project is created as a specific segment. So in case you are not implementing project accounting or projects, you want to track that particular cost or expense by project. You are not implementing any projects module or anything. You want to create that as a specific segment. You can create it, but if you are implementing project module and project accounting, you really don't need that particular project segment in your chart of accounts, because you can still take out the reports out of the project module. So you keep the architectural consistency, some default values. So you can define some default values for your chart of accounts, anything that you want to auto-populate, because imagine if you have 10 to 12 segments and you are entering an invoice, you are entering 10 lines in that particular invoice. How much time it is going to take if you have to enter 10 to 12 segments for each line? So we have to ask the business what are the default values that you want to auto default in any of your areas, any subledgers or anything. Seventh point is very important, future segment, and most of you must have seen the future segment. The use of future segment is in case usually we define 1 to 2 additional segments in the chart of accounts, and the reason is that once you define and design your chart of accounts, you no longer can change your chart of accounts. Once it is defined, you can never change it back. You cannot add more segments to it in future. So this is like your base, and you build everything on top of it. You can change your accounting rules in future. Whatever accounting rules that you will write in FAH, you can change those accounting rules anytime in future, and whatever mapping you want to change, you can do it. But if the segments structure is changed, everything is changed. You need to do the re-implementation of your application. So you cannot really change the structure of your chart of accounts. That is the reason, as consultants, what we suggest or what we do is we create 2 or 3 additional future segments depending on their business scenarios. If they say yes, we might use these particular future segments. And we had a business scenario where we were moving from e-business suite to Fusion Cloud, and the business had 7 segments in EBS, and they actually created 8 future segments because they said that when we implemented EBS, we had used up those 2 future segments really quickly within a year time, and we just want to be safe, and we just want 7 or 8 additional future segments so that we can, if we have some reporting requirements, we can cater that in future. We already obviously created certain default values for all those 7-8 segments, but in general business scenario, we usually create only up till 2 future segments. We don't create more than 2. But that is specific business requirement. In case you want to create more than 2, system-wise, maximum you can create up to 30 segments. What I have seen is generally people go from 5 to 9 segments. That is like more than enough. Anything more than 9 or 10 segments is means the maintenance becomes huge. The complexity increases from the maintenance standpoint also. So 5 to 9 segments is generally what I have seen, but system allows you to do up till 30 segments. I have seen a 17 segment chart of account also, like they were using mostly 12-13 segments and like fewer future. So it depends on the business scenario how much you want to use, but in general businesses we'll see 5 to 9 segments being used. Then we have the 8th point as segment ordering. So we should consider this for the data entry efficiency, because the number of segments that you create, those many segments also have to be entered by the users when they do the data entry, when they are entering the invoices, when they are doing the transactions. All those segments have also to be filled up. So your data entry efforts also increases if you have more number of segments. So if you really don't need any additional segment, you should not create it just for the sake of creating it. Then segment ordering obviously should be kept in mind for the data entry efficiencies. What should be the order of your segment? You order it, the entity segment should be the first one, account should be the second one, or cost center or LOB should be the second one. Whatever you want to define, you can define it. Then you have segment naming conventions. You should be logical while giving the names of the segment so that all the users understand it properly. Secondly, whatever the values that you're creating inside those segments, like it can be numeric, it can be alphanumeric, it can be alphabet characters. So you can choose to have whatever naming conventions for your parent values, for your child values, so that you have a logical hierarchies in place. Any questions up till now?
One question, Ashish.
Yep.
If I have like multiple within US, right, like means like I have two different entities. They're not different, could have a different ledger, I'm not sure, but like is there a requirement to define a different COA, or like it can be just the values, do we need to create a different instance or create separate values etc. sent to the instances? If a different kind of business, if a conglomerate like
even if there is a different kind of business, you have two different entities in US. So
like,
if you have
GE Medical Systems, right, and GE aircraft engines are two different, one produces airplanes, one produces medical devices, both are two different things. So they have, but that both are still in US. So what would you suggest, like in case of looking at?
See, the country will country specific would help you to define the ledgers, because both of them in US they're following the same calendar convention and the currency. The major distinct factor would be how do they do the reporting. If both of them have similar reporting requirements for their management reporting, and they have the similar segment structures for their reporting, like line of businesses, cost center, and natural account entities is the common one, and intercompany, then we can go for same chart of account structure. But if they have different reporting needs, because statutory reporting would remain the same for both of them, for the tax reporting purposes or statutory reporting, because both regulatory is the same for both, so that would not change your chart of accounts. But if the management decides to have different reporting needs for the specific entities, because the directors would be different and all those things. So for management reporting, if they need there is a specific scenario, then yes, we can go for different chart of accounts, and if it is a different chart of accounts, it is a different ledger. So both of the entities, GE Medical and GE Aviation, can go into different ledgers and different chart of accounts. But if they have similar reporting needs from the management standpoint also, both of them can go into the same ledger and using the same chart of accounts. You just create the different values, because the LOBs can be similar or same, or products can be same or different for both of the industries.
Products are different. Exactly, you catch the right point, because one is producing aircraft engines and one is producing medical devices for consumer or hospitals, like totally different products also. And
exactly, but those can be created. You can have a segment as a product, and you can have products for the medical facility and product for your aviation as well. So you can add in all the products here, and you can create hierarchies as well on top of it.
So you can create a different instance and attach, or like
no. So instance, if you create a different instance altogether, then it would be treated as a different chart of accounts.
Okay, and then you'll have a different ledger again.
You will have a different ledger. So when I say instance, that Oracle has just given this concept for confusing people. So it is just means you can understand that it is a different structure. That's all it is.
An instance is like an object to a class, like it's like let's flip it.
Exactly. The only reason they have given it so that you reduce the effort of creating the structure again. So from system standpoint, it is just treated as a different chart of accounts. That's all.
Okay. Thank you. Thank you.
Sure. Okay. Any more questions? Okay. Now designing the size and numbering of the system. So you can design the size and numbering of your chart of account segment and structure. So you can have numeric and alphanumeric values. You can decide whatever you want to have. You can decide the size of your chart of account segments. You could permit both alphabet characters, numeric only characters, and all those things. Now, what is a value set? A pretty basic concept. same concept as EBS, anybody who has worked on EBS, and if people are new. So value set is nothing but a container of values you create. For each segment, you create a different value set. People might be using the same value set in company and intercompany segment. That is possible scenario. But like if you read the documentation, Oracle documentation, they will suggest to use a different value set for both entity and intercompany segment. The reason is, if you have enabled segment value security at entity level, then it will apply to both company segment as well as intercompany segment, right? So the suggestion is to use a different value set, so that in case in future also you want to use a different you want to enable segment value security, maybe not at the time of implementation, you can enable segment value security later on as well. So suggestion is to use a different value set, but system wise you can have the same value set or different value set for both the segments. But other segments, obviously the value set would be different because the values will be different. Value set validation, we can only have independent validation in our chart of account. We cannot have dependent. Those are just the type of validations that you can have. Now you have to define value sets. That's a mandatory step to define your chart of accounts and your ledgers. You need to have your accounting structure instances in place. Valid segment values should be there. Account hierarchies are optional. It's not mandatory from system standpoint, but for reporting, obviously every business needs hierarchies, so you can optionally define. Now optionally create accounting combinations, optionally create security rules and cross validation rules. Now I'm going to explain the accounting combinations. What is account combination and all these things? Why do you first of all need your so let's say, for example, we have, these are my segments. We have entity or company, we have department, we have account, and we have intercompany. Right? So you can create whatever values that you want inside these particular segments. Okay, so it's a very simple example. You have entity, department, account, intercompany. Like this, you can have values inside it, and when you give codes to it, you just give some code of it, codes to this each of these segments. Let's say you can call A2F US Inc. as maybe 101, 102. So you can have 3 values here, 2 values, whatever you want to decide. You can decide that.
Ashish, how these values are getting decided? Maybe it's a basic question I'm trying to understand.
Right. So now, how do you decide upon what should be the length of these numbers? First of all, so you see that how many departments you have in your organization. If you have 5 or 7 departments or maybe 2-3 companies, you know in future, even if I'm going to expand, I'm not going to go above 100. So you don't need 3 values here. You don't need the length to be more than 2 or 3. So you can decide that maximum length is 3 characters. I can decide on that. But if you think that I have like more than 100 companies, 100 entities, and in future I might want to expand more, like we have 90 entities now and I want to expand more. So obviously you will have minimum 3 characters. You can have up to 4 characters, 5 characters, whatever you want. So you can decide upon the character length as well. Department also same thing. Generally we keep three maximum as 3 for departments. You can have 4 or 5, whatever you want. Account segment, if you have thousands of values, so generally we keep up to 5 to 7 as the length of this particular segment, depending on how many values you have in your account segments. Okay. So we see what is the business requirement, how many values they currently have, how many values they can expand in future or enter in the system. If they have a lot of values to be defined, then we keep the length to be higher so that it is scalable. In future they can go in and add more values, because once we decide the length of that particular value set, you cannot change it later. So once we have decided on this, we cannot change it later. We faced this particular challenge when we were migrating something from EBS to Fusion, and we sent our workbooks and everything was signed off, and by mistake the user mentioned the wrong length of that particular value set and everything was created in production. So we had to go over and change the complete configuration, like we had to reconfigure the things just because of the value set length was changed. So it's a very critical, small information but critical one, so that you can understand the business requirement, that how, if they want to scale in future, how many values they have. And you also need to decide upon the whether you only want numeric characters or alphanumeric characters. So generally what we do is, for we have different types of accounts. We have asset accounts, we have liability accounts, we have expense accounts, we have revenue accounts. So generally we keep 1 series as assets, 2 series as liabilities, 3 series as expenses, 4 series as revenue. So 1001, 1002, 1003, like this, all the revenue accounts. Then you can have some cash and bank accounts and all those things inside assets and all those things. So like this, for example, if I write assets, okay, I will say 10,000. Then we say fixed assets. I will say, then we have under fixed assets, we have furniture, equipment, property, whatever it is. So we can say 11001, 11002, 11003. Then we have current assets. Then we have cash, receivables, bank balances, or whatever it is. We can have 1, 2. Right? So we give a logical numbering sequence for all this. So anything starting with 1 series is my assets. Anything starting with 1 is my fixed assets, and then you can have 1, 2, 3 in the end for your each account value or anything. Then anything starting with 1, 2 is your current assets. So you can have any assets for your short-term investments or any other thing, any other assets that you want to have. You can have long-term liabilities, short-term liabilities, similarly defined in each of these things. So usually we follow some logical structure here. You can also, businesses also choose to have for their parent values, they can also choose to have alphabet characters. So for total assets, they can choose to have TA, FA, and CA. It is not for all the segments you should choose alphabets. Depending on your business scenario, you can choose some alphabet characters for your you just want to use alphabets for parent values, you can do that as well. So you can, that completely depends on the accountant or their CFOs, how they want to see the numbers or reports and what they are currently following versus what they want to see in future, if they're, how they are currently doing in their existing systems and how do they want to report it. But this is like a typical general business scenario, how we define it.
Okay, thanks.
Sure. Okay, so now we give this logical codes to all of this. Okay, now how does my combination looks like? Now, for example, I want to enter a transaction, a debit and a credit line for maybe for US entity. So the US entity code is 101, and I'm entering maybe some expenses for finance department. So what is my account code that has to be there? It should be 101. Or just let me write US Inc. Then finance department expense, and there is no intercompany. Okay, so the code for this is 101. Finance department is 30. Then my expense code is 20001, no intercompany 000 something. So I can have no intercompany here. Okay, so now these are all called as segment values. 101, 30, all this is segment values. When you write it together, we call it as a combination. So if you have to write it together, 101.30.2.000, this is called as my combination. This is my debit combination. Similarly, I will construct a credit combination. Maybe I'm paying cash for this particular expense. So this is my credit combination. This is what we construct the full string of accounting combination using our subledger accounting rules. So we construct what is the debit line, what is the credit line. We construct the amounts. We construct the each segment in our chart of accounts in my SLA rules. So our target is to construct this particular accounting entry. How we are going to construct it, we are going to see on day 3. But this is what our main purpose is, to generate our debits and credits and derive each and every segment from whatever information is available in my source system, right? So this is my combination. Now what is this? This is dot is called as a segment separator. This is my chart of account value. We can say segment value, entity segment value. This is called as a segment separator. And this full thing, when we call it is like a account combination. Okay, so when we call this is account combination. Maximum you can have up till 240 characters. Including the segment separators for this particular combination, you can have maximum up to 240 characters. And how many maximum segments can we have? We just talked about it.
30.
Right, so 30 is the right answer. So we can have maximum up to 30 segments. General business scenario is like 5 to 9 segments, and you can have 1 or 2 future segments defined in future. Any questions on this combinations or any chart of account segment values? How do we decide all of this hierarchies and everything?
So one question is, when we go to, so basically like when we do a production, go live, right? After we load all those values. So
You're
these
right.
combinations, actually, we have to, use any functionality to create such combinations, because in many cases where, like, when you try to create an invoice or expense, you have to choose some combinations for the accounting purpose. So those combinations, do we, intend to create using some functionality, using any task or something, or it will get created eventually as we go in the production? How
Yeah,
does it work?
that's right. So that's a great question. I'll answer that. So now, do you think we have this, we can create these combinations in the system? I have mentioned this as a setup, and we can definitely create those. There is a separate task to create manage accounting combinations, and we can definitely go and upload these combinations or create these combinations manually. Both of that is possible using ADFDI and whatever means you have manually. But do you think it is practically possible for you to create these combinations manually or in the Excel or anything? You have 5 to 9 segments, you have thousands of values inside each segment, you will have millions of combinations. It is not practically possible for you to define these combinations by yourself. And if, for example, you do not have those combinations there in the system, that does it mean that user cannot enter an invoice against it? The answer is yes. But to solve that problem, we have a small checkbox inside the chart of account structure that is called as dynamic insertion.
Okay.
Right? So when we enable this dynamic insertion, whenever a user is creating an invoice or anything and they are using this particular combination, which doesn't even exist in the system, the table name for this is GL code combinations. So you have this particular table. If this table and each combination will have a CCID for it, code combination ID. That's how the system understands which combination it is. So if this particular combination exists in the code combination table and you haven't enabled dynamic insertion, then invoice is not going to error out. But if this combination is not there, dynamic insertion is also not enabled, then you can obviously not create it. So let's say, for example, dynamic insertion is yes. Don't you think there is a risk of users creating wrong combinations? They might
Yeah.
enter wrong combinations, right?
Yes.
So they can choose wrong values. But see, first of all, obviously I understand that is a practical need. We cannot go and create millions of combinations. So in all the implementations that we do, we always enable dynamic insertion. We never leave it out. To solve that purpose of users creating wrong combinations, we create CVR rules in the system, cross-validation rules.
Okay.
Right? I have a separate slide for this. I'll explain that. Okay. So any more questions on this? Chart of accounts is a really important topic because you will not understand subledger accounting rules, FAH, if you don't understand this combination, segment values and everything. So this is an important concept, and this is like your base. Okay, looks like we don't have any other questions.
Ashish, one question, like, is it possible to increase the value set size in future? Like, suppose
No,
in
you
this
can't.
case. Okay.
You can't. Once you have deployed your chart of accounts and assigned it to the ledger, you cannot change the value set size. That's the reason I explained one business scenario when I worked. So there was a business requirement. They given the wrong size and they wanted to expand it. We did not go live. We were just doing the production configuration, and at that time we could go and define a new configuration again. So we did that, but there is no possibility to change the size of a value set once it is deployed and used in the ledger.
So, I mean, so what you did was like you created a new value set with the values and then attached that. I mean, how did you resolve that? I mean,
Just created a new value set and changed the value set.
okay, got it. Thanks.
Okay, so now we have discussed the cross-validation rules. We have to still discuss the cross-validation rules and all. So key attributes is obviously the number of segments. Segment sequences is also a critical thing for businesses. Like how does the segments would appear in the chart of account screen when they open up the lines and all when they are entering an invoice or a transaction or a journal or whatever it is. It can be a FAH journal, manual journal. It can be coming from your subledger. How does the segment sequences appear? Which sequence would appear first and second and third? Segment names and prompts, you can define the segment names accordingly. Segment prompts, how does the particular segment appear in the dashboard? So you have a lot of standard dashboards. So how does that segment would appear in the dashboards? All of that you can define. Segment labels and all those things we have discussed. Now, so natural account and balancing, primary balancing segment are mandatory labels. Rest all are optional. So you bare minimum, you need 2 segment labels to be defined. That is primary balancing and natural account. So you can go with entity and account segment. Without entity and account segment, the accounting entry does not make sense. In which entity you are actually doing that particular expense or liability or whatever it is. These 2 segments are mandatory. Default value sets you have to attach, and all of this. Chart of account instance also we have discussed. I'm not going to go through the screenshots. Segment attributes. Now these are my segment attributes. You can define, we have a summary flag. When we define the chart of account values specifically for the account segment, we have these attributes that are available. We have summary segment. You can say yes and no. Yes and no for summary is, if it is yes, it is a parent value. If summary is no, it is a child value. Allow budgeting, allow posting, whether you want to enable, obviously you don't post anything against a parent value. So in system, it doesn't allow us you to post anything for a parent value. Obviously we post only against the child values. Now what I mean by this is, if you see my hierarchy here, we have this particular hierarchy. You will never post anything against total assets. You will never post anything against fixed assets. Whatever transactions that you post, you will always post against the child values, right? And this will obviously roll up to your parent accordingly. So you will only post against the child values, and it will again roll up to your parent values. Okay. Then we have account type, what type of account it is: asset, expense, liability, owner's equity, and revenue. There are 4 types of account, majorly 4 assets, expenses, liability, revenue, and owner's equity. Then we have third-party control account. If we can use this additional feature that when you are using a particular revenue account or something, we can enable this third-party control account. Let's say if we enable at customer level, then it is mandatory to choose a customer for that particular account code that you're entering. That means you can only use that particular revenue account when you are entering a transaction in receivables. You cannot pass a manual journal for it. So there's additional control that is given, like customer, supplier, yes, restrict manual journals. You cannot enter manual journals and all those things. Reconcile. Yep.
In account type, can you please explain on budgetary credit and budgetary debit?
That is specifically used for your budgetary control. If you have enabled budgetary control and specific budget accounts are there, then we use that particular scenario.
Is it a general budget kind of thing, or your encumbrance accounting for?
For encumbrance accounting.
Okay, thank you.
Okay, we can have reconcile flag, yes and no. And there is some additional features in I'm not going to stress much on this. There is some internal subledger to GL reconciliation reports, standard reports that are available. So any account codes that you want to reconcile, you can just say yes and no, and there is some additional setup. You just run those programs and then you can run the reconciliation report. So it can auto reconcile, and you can also give certain financial category for Oracle Business Intelligence application setups. So some BI reports can be auto-populated or auto-generated when you provide this financial categories and all. Account hierarchies we have already discussed. Now account hierarchies, one thing is you publish your account hierarchies to the cube. You can create multiple account hierarchies simultaneously. Let's say for your management reporting you want to have a hierarchy, or for your statutory reporting you want to have a hierarchy. You can define your hierarchies, different hierarchies, and you can generate your reports based on those hierarchies, some ad hoc analysis or anything. So you can have multiple account hierarchies created in the system, and using the cube functionality you can actually generate those reports accordingly using the different hierarchies. If one hierarchy exists, only one version can be active for that particular hierarchy. Let's say you have a management hierarchy and a statutory reporting hierarchy. For that management hierarchy, you will have versions. So only one version can be active at a point of time. So you can create multiple versions, but multiple versions cannot be active at a point of time. So I've seen often people getting confused that we can have multiple hierarchies, but I can see only one version active, rest are inactive. So but within that particular hierarchy, you can create versions, and only one version can be active at a point of time. So you can though create multiple hierarchies for reporting, that is possible.
So technically speaking, like if I have a 3 hierarchy created, so I can still have a 3, each one, like the latest version should be active, correct? So at least 3 versions should be there. One for each. Okay.
Absolutely. So you can create multiple hierarchies for different purposes. We already discussed this, and this is another example, just the same example that we discussed on the Excel spreadsheet. Okay, so now we will we'll come to this cross-validation rules in a bit once we define the segment structure. Okay, so we'll take 5 minutes break now, and we will come back and we will define our chart of account segments structure in the system. We'll discuss some high-level flow, what structures we are going to decide and define in the system. So we'll just take 5 minutes break, and then we'll come back and do all that configuration in the system. Any questions?
Yes, yep. The hierarchies, I think we jumped past that, right? I want to, are you going to cover the hierarchies in more detail, or that is it? That's the only slide you have?
If you have any specific questions, you can ask me.
Because like there's like we maintain, because I worked at a small biotechnology company where you had hardly 1 million transactions in a year. A very small company, less than 500 employees. And where we used to manage the hierarchies manually. Only as accounts come, we used to maintain, and versioning and all that was not an issue with no master data and all that. But now I work at a really big firm, and they do maintain hierarchy versioning in DRM, DRG, and we import that and keep a monthly version of the hierarchy as the current version. And we maintain the previous version and the current version, base version, and like 3 different versions. And the current version is obviously for this current month. And every month we create a new version, basically. And I thought I could get a little bit more details on the hierarchies just for the account hierarchy. And we do maintain hierarchies for departments, and we do maintain hierarchies for other like company and other things also for drill down for dimensions in the space cube. But are you going to show it in the application? That's fine. Like
I will, yeah. So I will be showing how do you create hierarchies, how do you maintain hierarchies, and all those things. So I'll be showing you the everyday upload for hierarchies as well. Okay. Yeah. So you'll see that in the system. Don't worry. Sure. Okay. So we'll come back in 5.